Welcome, everyone. We're going to talk about bear market rallies today because a lot of people are scratching their heads right now. A lot of market watchers saying, how can the stock market be up roughly 30% off its March 23rd low? All the while, we have just this constant flow of really negative economic data coming in, including today when we got the unemployment statistics. Which were the worst in recorded history. The unemployment rate in the United States spiked up to nearly 15%. The only time that it's been higher that we're aware of is during the Great Depression, when it was estimated subsequent to the Depression. They weren't keeping track at the time, but that the peak during that period was around 25%. So it's a tough time, but despite that, stock prices are up. So a lot of people are asking, are we in the middle of what's known as a bear market rally? So let me just describe what that is first to begin with. So, a bear market is technically defined as a period when stock prices decline broadly by about 20%. And more generally, a bear market is just when stock prices are on a downward trend for a sustained period of time. But historically, what we've seen during bear markets is you'll have these spikes along the way when people might believe that the bottom has been in, only to be disappointed that when prices end up going lower. So I want to give you a little market history today, look back at the two major bear market cycles that we've experienced prior to this one in the last 20 years, as we all try to gauge what's coming down the pipe next. So let's go back to 2000. We're, of course, at the peak of the dot-com bubble. And then stock prices proceeded downward by about 50%. But what I want to point out is along the way, along this bear market trend, we had a number of instances where stock prices snapped back and in a pretty material way. 19% rally here, 22% rally there. Even down here, we saw a rally just before ultimately hitting bottom late in the fall of 2002. If we look ahead to the great financial crisis, 2007 through 2009, peak to trough, prices actually went down more, well over 50%. And once again, we find that there were a number of bear market rallies along the way, notably a 12% rally here. If we get down when a lot of people thought the bottom was in the fall of 2008, prices peaked around January 1st, but we were unpleasantly surprised. We saw another big fall, and stock prices ultimately bottomed in March of 2009. So that brings us to today. Where are we? Are we right in the midst of one of these bear market rallies? And the real answer is nobody really knows. I think a case could be made either way, and ultimately the most important thing is the trajectory of the virus. There's a lot written over the last week or so whether or not we are in for a major second wave of this thing come this fall. Of course, if that happens and we still haven't developed a vaccine or some other effective treatment, it's going to mean major consequences in many ways, including economically, and markets will surely respond to that. And likewise, even as we work through this process of reopening the economy now, if all of a sudden we have outbreaks occurring throughout the country and we have to go back into some kind of partial shutdown, that's going to create some major challenges, and markets will respond to that. But one thing I do want to say, on the flip side, if you wanted to make a case for the bottom being in on March 23rd, one case that could be made is if we want to contrast the last financial crisis to the current one, there was a big difference. And that basically is or was the Federal Reserve and the Congress stepped up much sooner amidst this current crisis. If we go back to what we're looking at up on the screen, the 2007 to 2009 period, the crisis really got going late in the year of 2007, and it just kind of sat and simmered all the way until the fall when Lehman Brothers famously or infamously filed for bankruptcy, and that's when all hell really broke loose. But the crisis was simmering for months and months to come and boiled over. that fall. What's really different here is, this crisis kind of just came on, the snap of a fingers overnight. If we go back a dozen years ago, the Fed and the Congress didn't really react, didn't take their big actions. They didn't pull out the bazooka, as they say, until late in 2008. This time around, the effects of the virus, at least to the economy, really didn't hit until March. But literally within a few weeks, we had the Federal Reserve Act and the Congress passing the largest economic support package in history at over $2 trillion. So perhaps one could make the case that, that combination of response from the federal government may be enough to have put a bottom in back in March. But at the end of the day, I think I go back to what I said previously. Ultimately, what is going to determine the future going forward is the outlook of the virus. And no one knows, just simply no one knows what that's going to look like. There's a very wide range of probabilities. And, Warren Buffett, he had his annual meeting last weekend, last Saturday, which was streamed live, and he talked about this repeatedly throughout the course of the meeting, that Berkshire Hathaway is being very cautious because the range of probability is so wide, and it would be foolish to believe that anyone really knows what is going to happen with the virus and what those ultimate economic consequences might look like. So if you're asking my opinion, if you were to ask my opinion, I think that we're in for more volatility going forward, and there's not a lot of insight there, but I think that is the only reasonable expectation to have, given just the uncertain nature of what's unfolding today. So it'll be an interesting period, no doubt. There certainly is hope with something like over 100 vaccines in the pipeline. It only really takes one. And once that occurs, this crisis is over. But, until that happens, we're going to be kind of in flux here, and we will be watching. So that's a little piece on bear market rallies. Get you our disclosure. Appreciate you tuning in, and we'll see you next time.